Right, Uber. And the IPO roadshow is underway, and we're learning more about the company's sales pitch to investors. And Leslie Pickard joins us now with more. Leslie.
Hey, good morning, Joe. All IPOs are inherently risky, but in the pitch Uber has laid out for investors, the ride-hailing company is seeking to convince them that it's not as risky of a bet as it may have once been. For one, there is price. Uber is seeking a valuation of $86 billion on a fully diluted basis at the midpoint of the range. That's about 28% lower than the $120 billion target banks had pitched the company 6 months ago. Uber is also seeking a more conciliatory corporate governance structure than most other unicorns that have gone public recently. The company is debuting with a single class of stock and an independent chairman. In both its prospectus and marketing materials, Uber says that its culture has been reformed and that it's collaborating appropriately with regulators to expand into new markets. But the long-term economics of Uber's business would suggest that the IPO is still very risky. Operating losses amounted to about $1 billion in the first 3 months of the year alone. And a portion of Uber's valuation is based on bets like investments as well as the development of its autonomous vehicles unit. And if competitive pressures don't abate in either its ride-hailing or food delivery products business, the company could continue to lose money on its core platform, guys.
Is that what they say themselves in the prospectus?
They do. They say they could never make money.
If the competition continues like this, we'll never make money?
Correct.
Wow.
Yeah.
Well, didn't you do something last week where you looked up the math at companies who have come to market when they've been posting losses to some time? Because people always say, look, that was the case with Amazon and others, but you kind of looked into some of the math.
Exactly. And what's interesting about this is they are pitching themselves reportedly as kind of this Amazon-like company, whereas they have a lot of losses now, but they have all these different businesses and they plan to be kind of this mecca of transportation. Therefore, ultimately they will be profitable in ways that, we can't even imagine right now. Amazon, when it went public, was looking at an accumulated deficit of about $6 million. So in today's money, that's about $9 million. Uber, on the other hand, in its prospectus, says it has an accumulated deficit as of the end of 2018 of $8 billion. So that's a factor of about 1,000, I think. I did that math correctly off the top of my head.
That was the end of 2018, and then the final 3 months they lost $1 billion, so maybe it's $9 billion by now.
Exactly. Exactly.